according to this. So we missed the first couple. My apologies. Jack, that 91.5 appraisal was from 2022, 23. Numbers haven't been out yet because there's a staggering of their dates, the fiscal year dates. So VA's fiscal year is October 1 to September 30. So there's a bit of an overlap. So we haven't received the 23 figures yet. Probably won't get them until the VA Loan Guarantee Conference in May, which I'm told is rumored to be in Nashville. Ooh, that'd be a fun time. So, but historically speaking, VA appraisals almost always come in exactly, because here's the thing, VA appraisals, it's not some special gremlin appraisal separate of, for VA. They are non-VA appraisals with an extra level of certification. The VA valuation process is the exact same as it would be for non-VA. There's no difference. The only difference is they look at minimum property requirements, and we're going to get into that next week when we talk about sort of the property piece of the VA, right? So here's your basic continuous sort of service, how long you've been in. Generally, what you're going to do is you're not going to have to worry about memorizing this too much. We're going to go ahead and speak to our service member. When did you serve? I served peacetime. What years were you in? Oh, I was in, post-Vietnam, 1979. Okay, well, you need 6 months on active duty. Oh, I'm fine. I did 3 years. So very, not that we run into this issue very often. And I'm just gonna, yes, sir, you're welcome. So we're gonna get into something special cool, but National Guard has a cool benefit, and we're gonna talk about that in a little bit regarding orders, and that's something that's very important. So there's your dates of service if you are eligible. Most of my service members are like, Rick, I did active duty 4 years. I ETS'd out, estimated termination of service, and then I did 4 years of reserve. Not a problem. We have our 4 years of active, okay? So that's going to be most of what we run into on a daily basis. Now, there are 2 types of orders, as I referenced back here. You see where it says orders underneath. Well, what kind of orders do we have? We have 2 types. We have federal and we have state. Federal orders are U.S. Code Title 10. Examples of that are Operation Iraqi Freedom, Enduring Freedom, Gothic Serpent. Gothic Serpent, for those that are history buffs like me, that was during the Black Hawk Down incident, Mogadishu, Somalia, 1993. Chief Warrant Officer Michael Durant, and then Operation Freedom Sentinel. Now, there's seriously, there's probably 40 different operations that have been going on since the second Gulf War in 2003. But the Title 10 orders are very important to understand. So if you are a service member and you're not sure, gee, Rick, I only did like 3 years active duty, but then I only did 2 years of reserve. Oh, so you really, do you have it? It sounds like you do. But Rick, I was deployed overseas under U.S. Title 10 orders, and I did 12 months in Afghanistan, or I did 12 months in Iraq. I did 9 months in Djibouti, or I did, whatever it might be. I did 6 months in Syria. If you've got 90 consecutive days under Title 10 orders, you are by statute a veteran. So therefore, Title 10 orders are what we look for first when we're looking at your discharge papers or your DD 214. So understand, and that's something also that I try to explain to my service members, is be very mindful of your own personal situation. What do you make for income? What do you have for assets? Memorize that. How do you file taxes? What did you do in the service? How long were you deployed? Were you on Title 10, Title 32, whatever it is? Be mindful of your own personal financial situation as you get ready to move forward. It makes the process a lot easier. So there's Title 10, that's federal. Now, state orders are Title 32. Title 32 orders are generally implemented in response to a national disaster or serious political unrest in an area which threatens citizens, public, private, and governmental properties. We saw this very much so during COVID-19 pandemic, as well as subsequent political and socially sensitive protests in the last 4 years. A lot of our Army National Guard, and this pertains to National Guard, a lot of our National Guard members were called up on Title 10 orders, okay, Title 32, my apologies, for COVID-19. Many of our units in Massachusetts were spun up and they were deployed to different parts of the state to do COVID-19 vaccination staging areas, or they were setting up triage at various nursing homes. Um, there were a lot of protests and riots down in Washington, D.C. They were deployed for that. Title 32 orders were very popular in Texas, and they still are in Texas. Army National Guard are being called up Title 32 for border protection. I know of some Title 32 orders for New Hampshire, Vermont, and Maine to go to the northern borders to secure those. So Title 32 happens more frequently than you think. And what's funny is during the COVID-19, before they knew how serious it was, the state were all the Army National Guard for each state. They called them up on Title 32. And this is where it sometimes gets confusing. And we're going to talk about a really cool benefit that the National Guard members have in a second. But a lot of them were called up under Title 32 orders only to be converted after about 30 days or 40 days or 60 days to Title 10 because the US government stepped in and said, hey, we're going to go ahead and we're going to pay for this. If you're Title 32, Commonwealth of Massachusetts, state of Connecticut are paying the bill for the Army National Guard deployment and call-ups. Under Title 10, it becomes federal, and then the U.S. government will pay for that. So Title 32 is a completely different ball game, and we have to ask our service members very carefully, which type of service did you have? Are you active duty, or you regular Army, regular Navy, Marines, Air Force, Coast Guard, or were you Army National Guard, or we're going to talk about reservists in a second. Oh, no, I was regular Army, or I was Army National Guard. Okay, well, that's good to know. What happened, one of the last pieces of legislation during previous former President Trump's administration was he passed the Veterans Healthcare and Benefits Improvement Act, HR 7105. This got very little press. I would venture to bet that the vast majority of our Army National Guard members here in Mass and every state are completely unaware that they may be eligible for the VA home loan benefit, but they have no idea. This was during the COVID pandemic. We couldn't do outreach. We couldn't go out and do presentations on bases or in educational settings. But what 7105 tells you is that National Guard members who served 30 consecutive days on Title 32 orders and an additional 60 days of any time Title 32 orders are now eligible for the VA loan. So you could be an Army National Guard. And this is a great opportunity for mortgage professionals and realtors that are on the call to get out there and have a bit of information to educate your community and help service members understand they may or may not need to wait, right? Because if you're an Army National Guard member in Massachusetts, you were only in 1 year, and all of a sudden on your 12th month, you did 120 days of consecutive Title 32 orders. Boom, you are now eligible for the VA loan. Whereas if you go back to my chart, Army National Guard and service members must have 6 credible years of service. So now you're not, as a Title 32 member, you could be in the Army National Guard for 18 months, do 120 days on Title 32, and boom, you just got to document that, and you're eligible for the VA home loan benefit. It's pretty awesome. So this is something that I reached out to Major General Keith of the Massachusetts Army National Guard. We've never really connected, but this is a huge opportunity for veterans and service members that are on the call. I would highly recommend that you spread the word to your other Army National Guard members and say, like, hey, did you do Title 32? Yeah, I only did 45 days consecutive. Okay, have there been other call-ups totaling 90? Did you have another 45 days doing something else? Yeah, I went down to, I did border, I did, Washington, D.C. or whatever it is. Boom, you may now be eligible for the VA loan. And that's a huge opportunity. I've done one of these where I had a service member who was deployed for it was about 135 days on Title 32. We were able to get a letter from his commanding officer, in addition to some of the LES statements or his Army National Guard pay statements. And we were able to document his time, and the VA Regional Loan Center in Cleveland issued the certificate of eligibility, and he was able to buy a house. So it's pretty cool. that she can do that. And again, like I said, very, very few are aware. Reservists, unfortunately, do not get to benefit from this particular provision because they are federal. They do not fall under state statute or state authority. So the reservists have no benefit from the COVID-19 or the political unrest that we've been seeing for the last 4 years. They must have 6 qualifying years of service. If you have questions about whether you have 6 qualifying years or not, we can certainly dive into that. There is a some documentation that we need in order to quantify if you had 6 credible years. It's off your retirement point statement. So very important. Now, one of the most important and special groups that we work with are Gold Stars and our surviving spouses. I've worked with both. I've worked with a young lady from Southern Massachusetts who her husband was killed in action in Afghanistan November 11th, 2009, and she was pregnant with their baby, and he was killed in action. I've also worked with several, almost a half dozen or a dozen surviving spouses. The surviving spouse and Gold Stars are bifurcated. Gold Stars are those that were killed in the actual line of duty. It doesn't have to be a killed in action. It could be an unfortunate motor vehicle accident on base or a training accident or something to that effect. Whereas a surviving spouse generally is the spouse, the veteran, passed away due to a service-related injury. Quite often, what I see around here, and it's different geographically because we see different sort of the different makeup of the veteran population and military community. I see a lot of Vietnam spouses whose service member died of acute Agent Orange exposure, cancer, things of that nature. And like I said, we just helped one down in Massachusetts. So if you're a mortgage professional or a real estate agent, these men and women that are Gold Stars and surviving spouses, they should be treated with the utmost dignity. Not that you wouldn't others, but these men and women have suffered greatly through I couldn't even imagine. I mean, Patricia Sherman down in Plymouth, her husband was killed in action. She was pregnant and left to do everything on her own. I mean, that was like when we had that loan come in, we literally dropped everything that we were doing. We put her and her daughter on a pedestal, and we made sure everything got done perfect, seamlessly, connected them with resources, anything that they need. We were pretty much, at their beck and call. And the guidelines are, as you can see, service-related death, they're allowed to use their VA benefit if they're unmarried, surviving spouse, or they remarried after they were older than 57 years and after 12/16/2003. This is a ridiculous provision. And this, we actually have a bill in the House with Representative Stefanik. She's getting some press right now. Representative Stefanik's got a Gold Star bill. We're trying to get rid of the unmarried surviving spouse, remarried spouse provision. Our contention is if a spouse, surviving spouse, Gold Star, has gone through the trauma of losing their loved one in the service of the country, whether they marry or they don't marry, they should always have their VA home loan benefit because the trauma is always going to be with them. So that's something that we're working on, and we're hopeful that it'll pass this year in this particular House. The last one here, non-service related death, very rare that you come across this, but in some cases where it's non-service related, if the veteran was completely what they call total permanent unemployability disabled for 10 years or more immediately preceding their death, they could have the surviving spouse could have the VA benefit rated, and then there's 5 years from the date of discharge. There's also a POW provision as well. Very unique, as you can see by reading these, very unique provisions. Sometimes very difficult to meet those. The vast majority that we see are the service-related unmarried surviving spouse or remarried surviving spouses. So a very special group of men and women. Character of discharge. What we're trying to do is, are you eligible? Well, we look at the member 4 DD-214. Service members will receive about, I think it's 5 copies or 5 versions of their DD-214. The member 4 is one of 2 that has the character of discharge on the DD-214. It's located towards the bottom. Service members 99.99% of you know exactly how you would discharge, so it's not an issue. I'm usually told right away, yep, honorable, no problem. The question is what happens if I don't have an honorable discharge? So character of discharge on a member 4 DD 214, you'll have honorable, general under honorable conditions, and then a medical discharge. Medical discharge, you were in service, something happened, it was before the completion of your enlistment period, and then you would discharge leg, back, neck, whatever it was, then you're medically discharged, you will have eligibility for the VA loan. General under honorable, you weren't the A+ soldier, maybe you got an A- or a B+, but you're fine, you're good. And then honorable's, of course, honorable. If you have these parameters, then you get this. This is your certificate of eligibility. Now, I put this up. This is a COE that I just pulled yesterday for a service member who is going to be buying a house. And if you look at the certificate of eligibility, I've highlighted some areas that are important to know. Entitlement code 10 is just it's global war and terror. I'm pretty sure that title 10 is. The branch of the Navy, I think it's important that we know what branch that you're talking to a service member. And then the funding fee piece, that's one of the most important. Exempt. This service member, I can tell right away, is disabled in some way, shape, or form. So I don't have to worry about disclosing the funding fee on this particular service member. And the funding fee can be anywhere from as little as 0 to as high as 3.3%. And the funding fee, not an important sort of conversation right now. It's not an out-of-pocket expense for service members. It is more of it's financed into your loan. You pay it. The funding fee is a way that the veteran home loan benefit is sort of a self-subsidizing benefit. So non-disabled veterans will pay it. Disabled veterans are exempt from it. And the last paragraph, I'll tell you a little something. The one I get the question the most is, Rick, I got my certificate of eligibility and it says I'm only good for a loan of 36,000. I'm like, no, that's your basic entitlement. What that tells you right now is that this service member has full entitlement available to him. So you are eligible, service members, to use the VA home loan benefit without any concern of loan limits, provided you qualify for them. If that VA entitlement was 0, that would indicate to me that you've lost some entitlement. You have an outstanding VA loan, which would be evident under the prior loan charged entitlement section, that little grid. It would tell me, oh, you might have another loan in Texas. So you might have an investment property in Vermont or something to that effect. But this particular veteran, he has full entitlement. He has no outstanding VA loans. He's good to go. He could, if he qualified, purchase a $5 million home with no down payment because there's no VA loan limits anymore as a result of HR 299, the Blue Water Navy Act, which was really cool that we got to. I was very proud of that. The fact that I got a chance to help rewrite some of the verbiage was pretty cool. The reason why $36,000 shows up is that is 25% of $144,000. The original VA loan guarantee provision law, written in 1944, only provided guarantee of 25% of loans up to 144,000. I don't know about you, but I can't find a purchase for a single family home in Massachusetts for 144,000. If you find one, God bless you, because they're not out there. But what happened was, over the years, VA created what's called bonus entitlement or second tier entitlement, and that goes above and beyond and supersedes what the basic entitlement is of 36,000. The other aspect of VA, which people don't really understand, is that VA operates under policy, but it's been established by law. So in order to change the VA loan, it actually takes an act of Congress to change it. So this 144 provision, or $36,000 basic entitlement, is actual federal law. It's in the USC, US codes, or the CFRs, which is called the Codified Federal Regulations. That's where the VA itself was created. That's why it takes an act of Congress, HR 299, to change it, and we did. So when you are a veteran, if you have this basic entitlement of 36,000, no, it's not your loan amount. It's just that you have never used your VA benefit, or you have fully restored your entitlement and you're good to go. Scroll down a little bit, you're going to see funding fee. This veteran is 100% disabled, and I can tell he's got dependents, perhaps a wife, several children, but that is his VA service members entitlement, comp and pen. Every month he receives 43.35 forever. Or, I mean, there could be a future adjudication where they take that back. It's rare, but it does happen. And that's income that you will use. If you are a mortgage professional or a real estate agent, you never ask veterans why what they received, why they got it. You don't have to ask them for the award letter. This is all you need to verify income, is the certificate of eligibility for disabled veterans, in addition to, of course, W-2s and things of that nature. But that's it. That's all I need. I've had veterans say, "Hey, Rick, let me get you my award stuff. None of my business. I don't care what physical, mental, emotional, findings you have. Not, you're good, right?" The other piece that's important to note is that veterans can request a funding fee, those that are not disabled, for a refund, provided that they meet certain provisions in the mortgage application. They must file the disability claim prior to closing, or basic minimum, file the intent to file form that they're going to file a claim. If you file your claim or the intent to file form before you close, you will pay your funding fee at closing. Several months later, you will be adjudicated, hopefully, and you will then be identified as a disabled veteran. VA is the award, the disabled date is retroactive to the date that the claim was submitted. So provided you submit your claim prior to closing on your loan, if that happens, the VA will consider you disabled. In this certificate of eligibility, it tells you to get your funding fee refunded to contact that number. I've done this probably 24 times. I helped my brother-in-law, Mark, help a veteran. I think it was almost 16,000 they got back. They actually delayed the closing 3 days so the veteran could get the money back, because it was a very unique scenario. But there is an opportunity, and that's why most mortgage professionals in New England, I would say across the country, are unaware of how this process works. Every mortgage professional, and I'm not telling you use me, I hope you do, but if you don't, I'm telling you, there will be mortgage professionals out there that say they do VA, they don't do VA. They might close VA, but they don't understand VA the way that they should. And this is a piece that I discuss with all my service members when I realize that they are not disabled. If I pull their COE or they tell me they don't have a service-connected disability, I go right into my spiel. Why? Have you thought of it? You should consider it. I'm not telling you to commit fraud. I'm telling you that if you have some aches, bumps, bruises, mental, physical, emotional, whatever it is, 90% of the time, the veterans go, "Yeah, I just haven't got around to it, Rick. Life gets in the way." I'm like, "Well, your funding fee is like $15,000. Can you let life get out of the way for one day to file an intent to file form?" They always say yes. So I've always beat this into submission with my service members. Very important to take care of yourself and file the claim if you feel that you should prior to closing, so we can get you some money back. Okay. If you do not have a COE and I've been identified as a dishonorable discharge, unfortunately, there's nothing we can do for you. Other than honorable, there might be an opportunity. You have to reach out to the Regional Loan Center directly, and then they have to adjudicate your file as to why you got an OTH. I'm told the turn time for that is about 18 months. I put this here as a as a no-go, because I've never seen one be successful in 21 years. Not saying it doesn't happen. And I can certainly give you the information to go out there. You'd be better off getting a DD 215 discharge upgrade than you would be as far as pursuing an OTH, filing with VA Regional Loan Center. So that was correct. That was all about eligibility. How am I doing for time? 15:15. I'm not going too fast, am I? Everybody okay? We good? All right. Okay, cool. Good deal. Cool. All right, cool. Anybody's have any hands? You can really, that's awesome. All right. Now let's talk credit. We get this all the time. Credit, 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 credit. Okay. So what about credit? VA never established a minimum credit score for the VA home loan benefit. Never was. You will not find a reference to a credit score in the VA home loan anyplace. It was never done. VA gives wide leeway for lenders to make decisions. Most lenders have implemented what are called credit underwriting overlays, which are established in conjunction with their risk tolerance. Lenders lend money, VA doesn't lend money. VA guarantees the loan 25% of whatever, and again, that's a deeper dive. I have a whole like hour into how the VA guarantee works, and it's not really relevant to our service members that have taken the class. But what ended up in the 30,000-foot view here, the reason why VA loans are 100% financing, no PMI, lowest interest rates, best credit guidelines is, imagine this: veteran buys a house for $400,000. The loan amount's $400,000. He qualifies, he closes. The Veterans Administration guarantees for the lender 25% of whatever that veteran borrowed. He has a loan amount of 400 grand, but 100,000 of that $400,000 loan has been guaranteed, backed, subsidized, whatever you want to call it, by VA. Meaning, if that veteran decides to move to Fiji, live in a grass hut with a glass bottom floor and look at fish all day and never pay the mortgage, the lender will foreclose, but is only on the hook for 75% of what that veteran borrowed. The rest will be reimbursed to the lender by VA. So essentially, the VA loan guarantee of 25% from VA is the veteran's down payment, which is why there's no PMI or mitigated risk. But the lenders still lend the money. So therefore, they lend the money, they take the risk, they allowed to put down overlays. Most lenders around here are going to stop between 580 and 620. Very few will go below that 580. Some even have no minimum credit requirements at all. I do have lenders that will go as low as 500 credit score. If you are a service member on this call and you tell me you have a 515 credit, that does not mean you're guaranteed to get a loan. Does not work that way. We're going to tell you how that works in a second. But when you are out there and if you talk to a lender and they're like, I have no overlays, you ask them, what's your minimum credit score requirement? 620, you have an overlay. The inexperienced and uneducated mortgage professionals, they don't know how to correlate the two. So every lender has overlays. There are no lenders that don't have any overlays, because once you start getting into that 580, 560, 550, you will see down payment requirements, residual income requirements increased, things of that nature. So those are called overlays. All right. All loans, including VA, we pre-approve or pre-qualify them using automated underwriting systems, which is Fannie Mae or Freddie Mac's. Fannie Mae is called Desktop Originator. Freddie Mac's called Loan Prospector. Think about it. VA is irritated because they're using Fannie and Freddie to approve loans that they're going to securitize and back. It irritates VA to no end. I know from good authority. I'm good friends with the executive director of VA. They have received funding. They're trying to create their own automated underwriting system for VA, which will certainly help more veterans, but that's probably not going to come for another 2 or 3 years, right? So what the AUS looks like, our automated underwriting systems, Fannie Mae and Freddie Mac, look at score, trade line history, derogatory payments, revolving debt, mortgage debt, active trade lines, length of credit history, serious to derogatory credit events, length of time since last. These are some of the pieces that the AUSs look at. There are different AUS systems. Fannie Mae's DO is different than Freddie Mac's LPA. They're just different. Sometimes you'll have one will deny a loan, the other one will approve it, and vice versa. So it's very weird. But they're trying to get some consistency with that and create a VA automated underwriting system to go ahead, make it easier for veterans to qualify, especially those that have some unique derogatory or tough credit situations. Okay. I get asked this all the time. What's good credit for VA? Well, we have VA manual underwriting, which is for those that don't get the automated underwriting. Well, what's a good credit for VA? Generally, I've seen the highest success rates for automated underwriting 640 and above. When you start to go under 640, it gets a little dicey. You get to 620 and under, it gets even dicier. And when you're under 600, lately I have not seen any VA credit scores under 600 that have received a automated approval. It does not mean that we don't do them. We have to do the manual underwrite on those, and even fewer meet the parameters of the manual underwrite than the automated. So that's why in our third class, I'm going to give you guys the full layout of everything that's required for the most part for a manual underwrite VA 585. Because there are some good veterans out there. I've seen a good VA buyer 565, low DTI, high residual. The derogatories was a result of cancer or a PTSD trigger, paying rent at $3,500 a month, but the mortgage payment's only going to be $3,000. They've got a great work history and they've got money saved up. That's a legitimate deal that I closed about 3 or 4 years ago, and we were like, yeah, all right, we'll do that. That's fine. That's the type of transaction, but I'll give you guys some of the specifics. So, it's just every transaction is going to be different. The credit report, the credit history, the credit trade lines, derogatory use, all different aspects are going to be taken into consideration in the automated underwriting engines that we call them engines, right? So I mean, we all know what good credit looks like, right? 780 credit score, no debt, or payment history on time, no problem. So that's good credit. But what are some of the significant derogatory credit events that we're going to look at on every single credit that we look at that for a veteran? Chapter 7. Service members, if you've got a Chapter 7 and it's been discharged over 2 years, we don't give a shit. It's gone. We don't care. It's no more. We don't look at it. It's end of story. We don't care. Conventional, FHA could be anywhere from 3 years to 7 years. So VA, again, the best loan out there. If you are a Chapter 7 veteran and you're between that 1 and 2 year period, you still may get a VA loan. You would never get one with FHA or conventional, but with VA, if you're between 1 and 2 years, and something happens and you have that Chapter 7, but let's say your rent's paid, the Chapter 7 was the result of PTSD or service-related injuries or cancer or strikes or unemployment or something to that effect, you still might qualify. Whereas previous, like non-VA loans, you're done. You're dead in the water. I have to highlight, divorce does not count. We get that a lot. Well, Rick, I'm going through divorce, Chapter 7. So what are you going to do? So divorce doesn't count, guys. I apologize. And if you're a Chapter 7 less than a year, you're just not going to happen. So not going to work. Chapter 13. This was rewritten in the VA handbook, 26-7, Chapter 4.7, I believe it is. If you're a Chapter 13, which we all should know what a Chapter 13 is. Chapter 13, the applicant is petitioner is reorganizing their debts to pay their creditors. If the Chapter 13 bankruptcy has been discharged, we disregard the Chapter 13 altogether. The assumption has been made that the payments to the trustee or the bankruptcy judge, bankruptcy attorney have been made. It's done. End of story. Used to be you had to provide additional documentation after that. That was changed July 27, July 2023. So very, very important. However, if you're in the middle of a Chapter 13 and you've made 12 payments or more of timely, on time trustee payments for your bankruptcy, you can still buy a house. Conventional, not going to happen. FHA, I can't remember off the top of my head. But with VA, you're in a Chapter 13, you've made 12 payments, you're good, you've made 18 payments, all your other credit is reestablished after that 12 months. You've no other derogatories. Now, if you're making your trustee payments on time, but you're late on your car loan, come on, you're not going to work, right? But if you've been paying 12 months and you've been a good little doobie and everything's been paid, you're okay once you've been 12 months. Again, less than 12 months, you're not going to be eligible. You have to get to that 12 months. But how cool is that? Like 13 months into a Chapter 13, you can go buy a house. Well, that's pretty freaking cool. And again, a lot of mortgage professionals just don't know the guidelines very well, right? Foreclosure, if you're 2 years out, we don't care. It's hysterical. And what's funny is you're starting to find Fannie Mae and Freddie Mac each year get closer and closer and closer and closer to mimicking VA. They're going to be releasing this year with Fannie and Freddie. They're going to be doing their own version of the VA appraisal rebuttal process, Tidewater, and the reconsideration of value. Fannie and Freddie are going to launch it this year. Freddie Mac has a great relationship with us at NAM, so we get really great information and content. But everybody wants to follow VA because it works. The way VA underwrites, it works. So foreclosure, if you're over 2 years VA, we don't care. If the foreclosure occurred within a 1 to 2 year period, hey, if you've reestablished credit and things have, or the foreclosure was caused by some issue, you still might be able to get it. And again, divorce does not fall into any of these categories. If your foreclosure is less than 1 year, you're not eligible. But how cool is that? I think conventional foreclosure is 7 years. I think FHA is 3 years for foreclosure. But for conventional financing, you're not going to have a shot until 7, which is crazy. So definitely VA best. Now, deed in lieu of foreclosure or short sale. This is the owner's attempt at trying to make something right without letting all this shit happen with this foreclosure process. It saves the lender money. It helps the veteran. So if you have a deed in lieu of foreclosure or a short sale, you've got to develop, there could be an opportunity to not even have a waiting period. If your deed in lieu of foreclosure happened and all your mortgage payments were made on time with no derogatories right up until the date that you gave the keys over, you may not have to wait. Lenders may have their own overlays, but VA says you could be okay, right? You could be okay, but it takes a lot of work. Unfortunately, we went through a period of time in the mortgage world where lenders were, oh yeah, in order to do a short sale, you need to be late 90 days or 120 days. It's terrible. A lot of servicers out there, and a servicer doesn't mean that they're a lender. Servicer can be just a company that services the loan, and they have a pretty poor history of providing, educated guidance on mortgage origination. That's why a lot of servicers have given up their mortgage origination licenses, because they don't do a good job. So just because you have a deed in lieu of foreclosure or a short sale does not mean that you're out of the game. You could be in the game. We have to look at the credit history. And again, I tell everybody the VA loan is a story loan. So we could tell the story, what happened, where, why, how. Can we do manual? What's the issue here? I could give you examples after examples in my 21 years of doing VA of some pretty cool stuff that we were able to tell a story and make it work, right? Other significant derogatory events, judgments, that's a deal killer. If you've got a judgment on the credit, end of story. If you have a judgment, then you need to be in a payment plan for at least 12 months with no late payments before it will be considered. So judgments is when the creditor has taken it one step further. They've now gone to a court. They've attached a lien to the property or a judgment or adjudication, and you owe the money. That has to be either paid in full at closing, or you have a payment plan. Sometimes judgments can be 12, 15, 30, 40,000, who knows? So it's a deal breaker a lot of the time. Collections. If service members, I've been doing this for so long. I know I've worked with active duty service members coming back from Iraq, and they walk in their house. This is a true story. They walked in their home after a deployment. He was with 3rd ID, 3rd Infantry Division. He walked in, the wife's gone, kid's gone, furniture's gone. There was a bowl, spoon, a cup, and a fork, knife, and that was it. And a stack of $17,000 of collections on the counter from his ex-wife. That's a true story, hand to God. Took us 18 months to get that service member ready. But collections, case by case, can be ignored, but it's at the discretion of the underwriter, because they are the ones lending the money. So we don't know how they're going to treat it. But I've seen VA loans go through with collections 6,000, 7,000. I've seen VA loans not be approved with 2,000, 3,000. It depends on the overall profile of the individual. The ones that we see the most, service members and repossessions seem to go hand in hand. And if there's any service members that are on our call, I'm sure you guys you have encountered that young man, woman that's been living on base, gets a girlfriend, boyfriend, they move off base, they get married, they have BAH, and now they can afford a $550 a month F-350 payment. Then they break up, and now they've got to go back to the base because they're gone, but the BAH is gone because they're now living on base, and they can't afford the 550 payment for the F-350, and now they have a repossession. Repossessions can be deal killers because sometimes those don't go to collection, so they don't go to charge off, they just stay there, and that can be an issue. So repossessions, I see a lot of repossessions with service members. Federal debt, that is your student loans, IRS, all have to be paid. So you're not going to get a loan unless those are paid. Mortgage lates, we can do loans with mortgage lates. Generally, a 1/30 late in the last 12 months is acceptable. If you have more than one of those in the last 12 months, or a rent payment for that matter, or a 1/60 plus, or one, you're not going to get approved. You'd be downgraded to a manual, and I don't know many lenders. It would have to be an extremely detailed, extenuating circumstance as to why you have a 60-90 day late, and now you're trying to buy or refinance a home. So it's you have to be very mindful of what happened, detail it to the point where you want to just give enough information, service members, that you're not getting into the private aspects of your disability or your mental health, mental, physical, emotional situation that may have caused that. But it's got to be pretty detailed. I tell my service members, if you want to get the house in that situation, lay it on as thick as you can. And a lot of times they're like, I don't give a shit, Rick. I'm going to tell you everything that happened to me, and it's okay. I don't care if they know it. I want the house. Cool, no problem. Charge-offs. We hear this a lot from everybody, not just veterans. Oh, 7 years, it's gone. I'm fine. No, guys, it doesn't work that way. Little thing called statute of limitations, legal. And why do you think collection companies call you all the time? If you give them just a penny towards your debt, it restarts the statute of limitations in most states. You can look that up, actually. So a lot of times the debt is not going to just fall off and disappear. You see a lot of, and I think any mortgage pros on the call, my brother-in-law being one of them, have probably heard this many times. Oh, this $25,000 collection's gone next month. Pretty doubtful, pretty doubtful. But we'll check it then. But it's going to be there, and sure enough, 99% of the time it's there. But charge-offs are at the discretion of the underwriter. If there is $50,000 in charge-offs, the entire credit history will be heavily scrutinized as to what's going on. If it's medical, they don't care. Medical debt is finally making its way to the category of we don't care, because insurance companies they don't know what they're doing, and they just hurt people with ruining their credit and their finances. So don't believe what you hear on Google, Bing, DuckDuckGo, that new one. That's pretty funny. This DuckDuckGo browser. Have you guys seen that? I don't even know. It's all over the news now. Commercials all over the place. But internet, worst place to go for VA home loan benefit information. Stay off there. Not good. But charge-offs, discretion to the underwriter, depends. Most lenders will have an overlay. If you have charge-offs that exceed $2,500, $3,000, $35,500, they will do their own manual downgrade. They will downgrade to a manual underwrite, and then it has a bunch of requirements that we have to follow. So charge-offs are pretty important. Now, that's just about 1 hour. Okay. I want to end on a positive note because we're talking about credit. So how do you guys maintain good credit? And I found these cool 10 little steps for maintaining good credit, because at the base of every VA home loan, the way that you increase or enhance your ability to buy a house is by maintaining good credit. Unfortunately, our service members, we see a lot of service members that go in the military. They don't go to secondary college. They come out of high school. High school doesn't have any financial literacy or education to begin with, which is atrocious. Our military doesn't have financial literacy or education for the most part. And I can tell you stories. And so when our men and women are discharged ETS out of the military, they're sort of left to fend on their own. They have no idea what to do, how to maintain credit, how to take care of their checkbook, their credit, their assets, payment histories, how to get credit. And so they kind of founder sometimes. So I wanted to sort of end on a positive note with 10 really good ideas. And I put these together and I'm like, yeah, this is pretty good stuff. I did a lot of research. Get your annual credit report every year. It's free. It doesn't cost you anything. It doesn't give you a score, but it will tell you all the trade lines that are on there, whether it's accurate or not accurate. So do that. There's a no-brainer. Pay your bills on time, right? I do this presentation a lot with members, and I'm usually very transparent and usually using very colorful language because it kind of resonates with our military. Pay your freaking bills on time. You're a big boy or big girl. It's not rocket science. If you borrow money, you owe money. If it's due on the first, pay it on the first. If you can't buy it, then don't put it on the credit and you can't pay it. Pay your bills on time. Set up auto pay. Pay more than what the minimum payment is because that minimum payment's going to change. So if your minimum payment's $25, you pay $50 because if you use that credit card at some point and the balance goes from $200 to $500, the minimum payment's going to go from 25 to 29. And if you only pay 25, then you're going to be 30 days late because you were $4 short. So pay more, right? But pay them on time. Reduce your credit card balance. Everybody tells you 30% is sort of the target goal. I tell people 25%, but that's going to be very, very important to keep that credit scores good. Don't, avoid new credit applications. Obviously, you don't want to go out there and get a Banana Republic, get a, TJ Maxx, go get a car, go buy Banana Republic, get Macy's, and have, I just did a refinance for a service member. Unfortunately, had over $89,000 in revolving credit card debt, 27 different credit cards, and I was like, hey, listen, this is the last time you're using your house to try to get out of this. You have to have a deeper understanding. You got to have sometimes a heart to heart with the service member and be like, listen, this is it. You're done. If you try to do this one more time, you're going to foreclose or you're going to go into bankruptcy, one or the other. But don't take out all that much credit. You want to have, I say, generally between 3 to 5 trade lines. Use them on a regular basis. Keep the limits below 25%, and you should see your credit scores improve. Old accounts, hey, credit history is one of the top 5 builders for your credit. If you have a long credit history with timely payments on time, it's going to help your scores, right? Even if I have people say all the time, oh, it's an old card, I'm going to cut it up. Fine, cut it up. Just don't close it. If you close it, that's going to take away your credit history and reduce your utilization ratio, which is now going to make it a little bit more difficult. And if you ever want to have a deeper dive into credit, let me know. We can have a conversation offline regarding that. But it's really important to keep older credit history. Okay. Diversify your credit mix. This is something that's not talked about a lot. You have a mortgage, you get an installment loan, you have credit cards. Don't just have a car and a mortgage. You got to use your credit to build credit. Well, people go, I'm afraid. Well, have faith in yourself, right? Don't be self-conscious or don't kick yourself when you're down. I understand you might have had a bad time with your credit, but learn from your mistakes. I learn from my mistakes all the time. I married my wife and she learns from her mistakes. She married me, right? But it's okay. So we learn from our mistakes, and she's not going to get married anymore because that's it. I'm the guy. But learn from your mistakes and keep working to get the credit history diversified with good payments on time. Becoming an authorized user will quickly bump your credit scores, but you got to be mindful of who you're going to be with that authorized user. If they're going to be late, then it's going to hurt you, right? Create a budget. I'm actually one of the only mortgage professionals in New England with a Freddie Mac Credit Smart certified certification. I went through a 3-month course with those guys. Got some great tips on creating budgets. Let me know if you want to have a conversation about that, but it's very important. Emergency fund. I try to tell people get 6 months saved if possible. It's very, very difficult, guys. Trust me. But if you can have 3 months, very important. We're going to talk about that next week in assets. I tell veterans, just because it's 100% financing, no down payment, don't go out and expect to buy a house with nothing in your bank. Bad idea. I've said no to service members. I've convinced them. I shouldn't say I said no. I've convinced them it's not the right time to buy. You buy the house. Any of us on this call who own homes know you bought a house, and within a few months you're fixing something. If you don't have money, a budget, if you don't have an emergency fund saved up, if you don't have diversified credit where you can go ahead and have the credit to maybe get something to help take care of a repair, if you've got nothing, then you could be in a lot of trouble with that purchase of the home with zero money saved up. And then be patient. I tell my pay service members, be patient. It takes time to rebuild. It's not going to happen overnight. Some mortgage professionals say, I can rebuild credit. They're FOS. Most of them are full of shit. It's a temporary fix. The Commonwealth of Massachusetts Attorney General and most Attorney Generals across the United States advise against mortgage professionals doing credit repair. It's bad. Just like they don't want us talking about CPA stuff, that's highly frowned upon. Mortgage professionals should not be talking about credit repair. I can tell you through some of the systems that we have what might happen, but I'm not going to give you advice on how to fix it. But be patient. That's going to make a big difference. You've been renting for 2 years. What's another 6 months? That might be the difference in getting the home and being in a good financial strength and position, and then otherwise, or be in a position where you might lose your home. And by the way, with veterans, if you have a foreclosure, you lose that house or the VA loan, you lose a portion of that entitlement, which means you may not be able to go ahead and buy another house in the future, or if you do go to buy another house, could require a substantial down payment. So it's very important when mortgage professionals work with veterans, service members, to have that conversation about mental, physical, emotional preparedness and financial preparedness to make that purchase. Very important. And with that, we got about 15 minutes for Q&A. I want to, I don't want to make these classes too long because seriously, there's an 8-hour, 10-hour class that I could teach everybody in a deep dive. But I mean, I can barely get through a lot of the stuff on my VACE class for realtors. So I want to make it an hour, but I leave myself open for Q&A now, and questions at any time you want. Call, text, all my information's there. I do have, what is my opinion of credit repair companies? I think the vast majority of them are freaking pirates, to be quite honest with you. I have yet to find one that does what they say they're going to do. And the other thing too with credit repair companies that I found out through my experience, it's a good way to milk somebody for money, because the way that they get around violating some of the Fair Credit Reporting Act. So Fair Credit Reporting, FCRA, FACTA is the Fair and Accurate Credit Transaction Act. So that's FACTA. And then you have FCRA, and then you have ECOA, Equal Credit Opportunity Act. Those three pieces of federal legislation, these credit repair companies have to get a fee up front, a little one, and then 95% of them will put you on a monthly payment plan. So you're sitting there and you are a service member with a 525 credit score, and you need to rebuild your credit, and they know they have you by the scruff of the neck, and they can just milk you for 12 months, 18 months at $100 a month, and they're doing little things at the same time. I don't know of any credit repair companies that work. I know that service members can repair their own credit, and I have a great contact here in the Commonwealth of Massachusetts. I work with her very frequently. I do a lot of volunteer work at the Bedford VA Hospital, Building 80, with the Community Recovery Connections team, as well as the Operation Financial Wellness Program with Will Hatley. Sue Katz in Massachusetts, and she's with the American Credit Consumer Counseling Agency, which is a legitimate nonprofit, 501c3. She will legitimately, for free, help you get your credit, go through everything, and tell you what's got to be paid off, and you can do it yourself. The biggest problem that I have with veterans and credit repair is they're freaking lazy. I can take a horse to water, but I can't make you drink. Okay, I will tell a veteran, go see Sue, do this, do that, do that. They come back to me, and next thing you know, the score hasn't moved. Well, Rick, the score hasn't moved. Did you do anything? No. Okay, well, what do you want me to tell you? If you leave the light off and it's dark in here and you don't go switch it on, it's just not going to turn on by itself. It's going to stay dark. So you have to you have to be motivated. I've seen veterans come out of that program and they were like a 530, and next thing you know, within 24 months, they own a home. So you can rebuild your credit, but I would be very conscientious about the credit repair companies. I would first go see Sue Katz, reach out to her. She can hook you up. She's at the Bedford VA hospital every week, and that's all she does. And she's one of the most sort of she's got some of the most amazing awards from Massachusetts Army National Guard for the work that she does at the stand downs, yellow ribbon events, educational events at the Bedford VA, Jamaica Plain, was the other VA hospital, JP, Bedford, out west, Central Mass. She's all over the place. So Jack, I mean, if you want, I can hook you up with her. She's awesome. She's super awesome. Let me see here if any other. Okay, here we go. Yeah, Sue. So my VA class that I teach, it's the Certified Veteran Lending Specialist class. That's taught through NAMB. We've had realtors and they've loved it. The test is kind of hard at the end, but it's certainly an investment in yourself. It's a great class. I'm trying to get NAM to host, and I would be the instructor. We've done it in Massachusetts twice. We typically get between 20 to 40 attendees, but yeah, it's it's a great class. It's a deep dive into the handbook. I mean, the class that I teach, the 8-hour class, it is a deep dive into 26.7, chapter 4, chapter 10, MPRs. It's deep. So you may not pass the test, but you're going to have the book. You'll have my presentation. You'll be able to sit there for 8 hours and learn a ton of shit. And it'll certainly make you a better real estate professional. It's way better than the MRP. The MRP, the military relocation professional, I used to teach the finance portion of that. I think it's a bit watered down and diluted. I think it's really, really old, and I think it needs to be revised. I helped provide some guidance for Mass Realtor CE committee, whatever it was. I guess they recently changed some of the VA guidelines as VA syllabus for the class, but yeah, let me let me know. Can I get the attendee list here for who's here? Because I want to send you guys the ones that attended. If you guys could, if you're listening, if you could all do me a favor, in the chat, put your email addresses before you sign off, because I'm going to copy and paste the email addresses, and then I will send the PDF to you guys. So you have this handy with some of the specifics regarding the class, what I went through today. That way I can get it. Let me see if I can actually. You know what I can do? I can do one better. I'm going to save this. Why didn't that work? Where is? What I'm trying to do is get my. It says chat's disabled. That's not right. Oh. All right. How do I? All right. Do you know what? Everyone, put your emails in the Q&A. I don't know why the webinar chat is disabled, but the question and answer works because there you go. How do I enable chats? That's weird. Let me see if I can just do this. I know what I'll do. Give me 1 second. Okay. I got a picture of everybody who's on this, the participants. I'll get this out to you guys shortly. And Sudo, Keller and Sanford. Gotcha. Super duper. And with that, I mean, anybody else have any other questions that they want to bounce off? Everybody should be able to talk.
Hey Rick, Thomas Stevens.
Hey,
That
sir, how
was
are you?
man, that was great. I appreciate that a lot. Um, I'm actually so licensed realtor, Mass Rhode Island investor, Marine veteran myself, disabled Marine veteran, and I actually just founded a nonprofit helping veterans get their real estate license. I'm going to talk to you offline actually a lot. I've been looking for someone like you that I need to kind of vibe out with.
Yeah, man, that'd be
So
great, bro.
yeah, I found you on Instagram. I just actually put up a post. I tagged you on it. So I gotta take off for now, but this was great, and I'm gonna be engaging with you shortly.
Yeah, man. Share with your friends next week and the week after. We'll get some good stuff. So hopefully you guys all come back for next Monday and the following.
Yeah, good to go. Great work. Thank you.
Yes, sir. Thank you for your service, man.
I appreciate you.
Rick,
Yes.
it's Sue.
What's up, buddy?
So thank you. I loved seeing that you were doing this. It's so needed. Um, I I go really pretty ballistic almost daily in my world of real estate when I hear negative things about VA loans, and just been working really hard
I know.
to try to undo that. And so much of this information is it's just needed. Some agent heard, 10 years ago, somebody else in their office complain about something, and it turned into it's a negative thing. And you know what? I've had years where 85% of my transactions were either first responder, most often through VA, not always, but or military. And I would be very happy if that's the only thing I handled. So I tell them, continue on with your negative thing, refer them to me, I'll close it out, and that will change your mind. So
100%,
thank
Sue. I
you for
mean,
all you do. I know you
I,
spend your whole days doing this and helping people who need the help and already earned the right to get good help like from what you're offering. So thank you.
oh, you're so welcome, Sue. And it's great to have advocates like yourself. And, we'll connect again offline. And, it's hard for me sometimes to find good real estate professionals that are advocates for our service members because we have a lot in our industry, mortgage professionals as well. Certainly on our
Mhm.
side, they're more concerned with the paycheck than they are anything else. And,
Absolutely.
it's unfortunate. And a lot of times I'll teach a class and I'll have, a real estate professional or a mortgage professional stand up and go, well, listen, Rick, if you're telling me that they have 62,000 liquid assets oftentimes, why don't they use a down payment? And my response is always they earn the right not to.
They earned it. They already earned it.
Yep.
And
Their
we
down
owe
payment,
them.
their down payment was 12 months in Afghanistan, losing a couple
Yeah.
friends,
Yeah,
or the
exactly.
emotional issues that they're dealing with when they come back. That's their down payment. My
Yep.
job is my job is to allow them to access a benefit to go ahead and make the dream of home ownership a reality. And
Yeah.
I've challenged real estate agents and loan officers, prove to me it's worse. And in my
Yeah.
class that we do a deep dive into the appraisal piece, minimum property requirements, tidewater, reconsideration of values. And when I do presentations in front of real estate offices, there's always a skeptic in there, and I usually turn them. But I'm like, listen, hey, if you're a realtor and you have the choice of taking a conventional loan or a VA loan, which one are you going to take? Conventional. Well, why is that? They tell me. But if I tell you you have two transactions, one gives you three chances to defend value,
Right.
one transaction gives you one chance. Which one do you want? Well, I want the
Hmm.
three. Well, that's the VA. And
Right.
their mind kind of blows. They're like, oh my God. Because then I ask them, do you know what Tidewater is? And they go, I've never heard of it. And
Uh,
then I try to catch them in a lie because I'll go, all right, how many in here have heard that VA loans come in value less than non-VA all the time and their hands go up? And I go, how many of you have heard of Tidewater? Nobody's hands go up. And
right.
I go, I got you. You're lying.
Exactly.
And
Right.
they look at me like, what do you mean? And I go, if you were experiencing VA appraisals that were under contract, below valued, you'd know what Tidewater is and the reconsideration of value. But since
Hmm.
you don't experience that because they come in 91.5% of the time, all the time.
Exactly. And
And
the
it's just,
problem is they're telling because of course, like we can't, it's not our decision on which one to take, but what that means is they're talking to their sellers about, don't take this one, which is unethical at the core. And then they don't know what they're talking about, and they're passing along false information. And that's why I get so fired up.
Oh, I
could
get
talk
so
about
fired
this
up
for
too. And and
4
it's,
to 5 days. I get so upset by this topic.
I tell everyone, we try to network, and I tell my real estate professionals, my referral partners, I'm like, listen, I just want, you can send give all your loans, the conventional loans, to everybody you want. I don't care. But if you've got an office of 100 agents, I just want all your VA or your FHA. Just give me that, because I'll tell you, nobody in New England, no loan originator in New England knows VA like I do. And
Right.
your service member is going to get more than just a VA loan experience. We're going to talk about tax exemptions. We're going to talk about
Right.
disabilities. We're going to talk about funding fee refund requests. We're going to talk about MPR. We're going to do a lot of things up front that's going to
Mm-hmm.
really open and broaden your mind. So, and
Right. Yeah.
that's what I do. So, I will let you know when we're going to be having the CVLS class up here again.
Okay. Cool.
Don't get too upset if you don't pass the test, but
No,
it,
and you know what? That to me, um, if I passed, great. But for
you
me,
can probably pass.
it's also, if I didn't, just having that level of knowledge, because I think I'm pretty good at explaining most of the topics to the agents who haven't even spent 10 minutes talking
Yeah.
to somebody about it, and then they just pass along this negative information that's not true. Even if I was able to obtain a little more evidence when those things happen, and plus serving my military clients better.
Yep.
So having I mean, obviously as a loan officer, you would need that. I would just be thrilled to be in a deep dive situation, to know a lot. I feel like I'm maybe know about 60% of it. Getting that up to, 80, 90, whatever would be a dream. I would
Just
love
put me on
that.
speed dial, Sue. If you have a question in V or anybody in your office,
Yeah.
I've got some phenomenal resources, and but yeah, I mean, so next week is going to be great, because next week we're going to talk about sort of some of the employment stability, continuity with previous military service, um, income stability, and why it's important, and then assets, and then the third, the 9th of February, we're going to like share the shit out. Like, this is how you know you can really help veterans, like, because there's a lot, and you will see a vast variation in credit scores between enlisted personnel and officers. It's insane when you start getting higher ranking enlisted personnel, like an E7, E8, E9, first sergeant, master sergeant, sergeant majors, command sergeant majors. You get lieutenants. I don't think I've ever worked with a lieutenant 01, 02, 03, 04 up that has had a credit score under 680. But I've had a lot
Mhm.
of enlisted personnel where 585, 590, 605, 620, 615. And those men and women are told, because, they're going to lenders like Veterans United, which is the worst lender in the United States for veterans, the worst, that you can't get a VA loan unless you're 620. So they stop looking, because they think who they spoke to is the end all be all of VA, because Veterans
Right.
United comes in New Day Financial and USAA and Navy Fed, they come off like, oh, this is it, 620 or better. No, it's not, because I just helped Trisha Barker with a 605 credit score, and she's super happy. So,
Right.
there's a lot of opportunity out there, and good real estate professionals that understand the variety of types of veterans, and the different, everyone is different. There's a lot of opportunity. Those that have become advocates for them, those are the ones that differentiate themselves. And the community is a very tight community militarily, and they talk. And once you hit a home run for a service member, they trust you, and I'll never get in their circle. No civilian will ever get in that circle. But I try to get as close to that circle as I can, because I want to be that resource for them. I want to be that go-to, that trusted confidant, and to give them unbiased legitimate information that's based on the handbook, and that's sort of what, what I do. But so the next couple classes will be great. In the meantime, questions, anything that pops up, let me know. But I'm so grateful that you guys came on, and hopefully Brendan and Derek, it was good for you guys, and you enjoyed it, so as well as Miss Tran and Tracy. So with that being said, if there's no specific questions, we'll wrap this up, and I'll get the PDF file out to you guys so that way you have it for reference.
Amazing. Thank you.
Sound good? All right. With that, thank you. Any service members that are on here, thank you for your service. I know I speak for my wife and my daughter and our family and our company. Thank you for your service. And we'll talk to you guys next week. Bye, guys.
Thank you, Rick.